What is going on, divers? I'm so super excited to have you here today within this live. So in today's live, we are going to be sharing with you the best trading strategy which will help you to make massive profits in trading any kinds of the market. So today's video, we are going to be using an example of our volatility 75 index. As you know, it is our best trading asset in this YouTube channel, guys. So first thing first, let us go directly to the point. Always when you come to the chart, when you open your chart, first thing you have to know that you have to find three things. Step number one, you have to find the direction. What? Direction, guys. That is number one. Are you getting the point? You have to find the direction of the market. After finding the direction of the market, so number two, you have to get your what? Your structures. Your what? Your structures. So after finishing getting the structures, step number three, you have to do what? You have to find your entry points, guys. Your what? Entry points. So these are the only things what you need to be profitable in the market. It's so super easy, simple. Just stick around with me up to this end to understand a step-by-step process. So how to get the direction, how to get your structures, and how to get the entries. All of those things we are going to share them with you guys. So first step, what you have to do after understanding that I have to find the direction. How do you find the direction? We all know that the market, it always move, making the high highs, high lows, high highs, high lows. So if we know all of us, we know very well the market moves, making the high highs and high lows, or making the equal highs and equal lows, or the vice versa, making the lower lows and lower highs. So we know it always that happen in the market, but the problem comes from here. As you know, the market making the high highs, high lows, the problem comes how to identify this low so that you can take your entry. Are you getting the point? That is where the problem comes. All of us, we know to identify them. The problem comes at the execution. What? Execution of the market. So we are going to solve that problem. So what you have to do, what you always have to do after opening the market, you have in the mind that you have to find the direction. Number one, we always start on high time frame. Always start on high time frame. What we call a top-down analysis. Top-down what? Top-down analysis. Are you getting the point, guys? What we call top-down analysis, or multi-time frame trading. What we call multi-frame trading. So as a multi-time trading, which means we have to start from monthly and then we drop down to M1. That's what we call a top-down analysis, or what we call multi-time trading. So even if you are a scalper, even if you are a swinger, even if you are intraday trader, it doesn't care, it doesn't matter which type of trader are you. It's you so to shape yourself to understand which the time frame you should use. But just know in your mind, even if you are a swinger, even if you are a position trader, you have to start as a must, guys. We stop taking things for granted, guys. This forex, it is a business. So we have to start on high time frame and in monthly one. Why monthly? Monthly, we use monthly time frame as a direction. A what? A direction. That is the reason of the monthly. So If you can't go in, yes, you are scalper, my friend. You don't want to go in what? In monthly time frame. How will you determine that the market is buying, market is consolidating, market is what is selling? How, guys? So that's why in most cases we get the entries, we take buy, the market hit our stop loss. That is because of what? Of the problem. We don't go on high time frame to find a direction. Monthly, its purpose, it's always for what? For direction. Take it from today. Monthly is for direction. I don't know, it is the right spelling, direction, whatever. Direction. Weekly is for what? Structures. It is for structure. Weekly and daily are for structures. So entry time frame, we always take entries on hourly time frame. Which are hourly time frame? We have H12, we have H6, we have H8, we have H4 up to H1. Are you getting the point? So another category, we have refined time frame. Refining time frame, here we find that we start from H1 to refined, we have and minutes. Are you getting the point? Those are refined time frame. What is the purpose of the refined time frame? The purpose of the refined time frame, by which means, let us say this is a H4 candle, bullish engulfing, H4 candle. Are you getting the point? Your entry is going to be here. That is what? Your execution is going to be there. If I drop down, if I refined my entry, and I go to H1 here, let's say that here around here, H1, it have also given me what? It have given me a bullish engulfing, by which means my entry will be here. Do you see the difference between executing on entry time frame and executing on refined time frame? Are you seeing the difference? By which means the refined time frame, it will give you a best what? A best entry confirmation, even though the entry time frame will give you a super best entry, but the refining, it is what? It is good. And another thing, the good of the refining time frames, which means you will take an entry here, which you are going to be getting in H4. In H4 candle, you get like 3, like 1 to 3 are, but when you refine, you can find that you're getting 1 to 6. Are you getting the point? If you refined, are you getting? So that is the reason. Let me give you a good example so that you can identify which trader are you. This will help you to know exactly which type of trader are you. So this is what our monthly time frame here. We have our monthly time frame. This monthly time frame, we are going to do a tree here. This is our tree. After getting our direction, we have to make our structures from what? From weekly here. Here we have daily. We go to, this is structures here. So we go to entry time frame. Entry time frame, here we have H4. Here we have H1. Those are what? Entry time frame. Whenever after getting your direction in monthly time frame, and you get your structure in a daily, after getting your structure in a daily, the next step, you have to wait the market to come on your structure and take your entry on H what? On H1. This is H1, guys. On H1. On H1. by which means this is our daily structure. Let me clean. This is our daily structure. If this is our daily structure, and the market have come tapped in a daily, we have to wait here in entry time frame, by which means we have to go in H4, in H1, and then we wait the entry confirmations here. Are you getting? When we get entry confirmation, we refine again to what? To H1 or to minutes. Of course, we are in H1. We refine to 30 minutes or to minute 15. Are you getting the point? So let's say that this is a weekly structure. A weekly structure, we have to wait here in H4. We have to wait here in H4. The market come and tapped in. We refine down to H1. Are you getting point? We refine down to H1 so that we can get a confirmation and then we execute. That is the purpose of the high time frame. That is the purpose of the what? Of the top-down analysis. So, if you are a swinger, you know where you are dropping, and if you're a scalper, you know where you are dropping. Stop starting from H4s. Guys, you will not get a good direction. You will get it, and the H4, you can see it is a buy, and then the day is saying sell. Guy, you will cry, bro. You will cry, man. You will cry for sure. So let us go to do our top-down analysis, and we see what it is in the market right way. We said we have to start from the monthly time frame. So you can see that right now the monthly, what is the monthly saying? We can see right now the monthly is saying that we have been coming making the higher, the lower low, lower highs, lower low, lower high, lower low, lower high. We have come back to make a retest. Now we can see that whenever we know very well that the market moving, making the high highs and high lows, or making the low lows and low highs, which means this is a continuation pattern here. We have come to make a retest and then we continue down, which means we are making a retest. This is a monthly. Are you getting? We don't know if the retest it is over or it is still continuing. We are still in the retest and then we drop down. Are you getting the point? But the picture is that we are making a retest and we go down. If this comes at the monthly close above this area, so we're no longer looking for the buys, we'll be looking for what? We're no longer looking for the sales, we'll be looking for the buys. So as well, we have things to see our direction, we have to drop down to our structure time frame, that is weekly and what? And daily. We are in weekly. When you reach in weekly, you have to get an horizontal tool or align tool like this. Find the high in weekly and the low and what? And the low here. By which means we can see that the market have come and made a retest, which means the weekly it's showing us that the retest it is done. If we come back again here, we shall, if the market comes back here, we will be making a double top and then we go down. That can happen. Are you getting the point? But we can see that the monthly give us the what? The sell direction, and also weekly is giving us what? The sell direction. That is what we only need to see. Are you getting the point? So we have got our structures. How to take our entries? We are still refining. Now we go in daily. To get the clear structures where to be waiting the market comes and then we take a buy or we take a sell. That is the reason of the what? Of the daily structures. So let us go to the daily. Let us head to the daily. We are on a daily right now. This is our playground. We can see, guys, this is our playground. As well, you can see that the market, it have been making this move. It was forming this move. making the high highs, high low, high highs, high low, higher highs. We break the structure and we come forming the lower low, lower highs, lower. We have come back and now we're here. So what you have to do here, you can see that if the market comes here, we're expecting some buys before we sell. Before we do what? Before we sell. If the market comes here, we shall do what? We shall buy before we sell. So we have to get also our horizontal line. We have to get our horizontal line so that we can make our structures clear in a daily. So the daily structures, we can use a triangle tool to get our daily structures. We can see this one, we have here structure, and then we make a duplication, we put it another here down. Are you getting point, guys? We have another that. This is the daily. We duplicate this also like this. These are the structures. What we have in a daily right now. This is what is going on right now. You can see, guys. This is what is going on in the market. So as well, guys, you can see that the market it have come here, making the high, come back and form the equal lows, come back here up, form another high, but failed, formed a low, a high, a low high, but which means we are expecting to break or to come back and make a retest. You can see where we form a high, a low here, we formed an equal high. Are you getting? We break this structure. Now we have come back to make a retest, and then we go what? We go down. If we break this zone here, we go down. If we fail to break this here, we will come up. Period. That is what we need. Now, if the market come back here, we will drop down into what? Into our entry time frame to take entries to bring the market up. If the market here gives us what? We are going to go in a entry time frame. If we find the entry criteria here, and then we take the market up. If the market breaks here, we will wait a retest of this zone, and then we bring the market around this. If it breaks here, we will bring to this weekly zone. Are you guys getting me? Are you getting the point? This is all what you need to master. This is only what you have to understand. By which means you will be having a good enough time to not take panic. You wait the market to come to you so that you can take a perfect entry on a perfect right time at a perfect zone. Are you getting the point? This is the only strategy you need. So let us go to what? To entry time frame. Our entry time frame, it is H4. So what do we have here at the H4? What do we have here at the H4? We can see that. Let us go to line chart. We can see very well. We can see here very well. My pencil, it have refused to write. Okay, let us first leave it. We shall use an arrow so that we can understand each other, guys. So you can see that here around the market is making the high, the lower low, lower high, lower low break. Now it have come to form what? To make a retest here, and then we expecting if this zone get respected, we can break below. Are you getting? If this zone get respected, we have to break this. If this zone fail to be broken and we break above here, we are going to take our buys, we bring the market to this zone. Are you getting the point, guys? So let us go back to our what? Let me first mark this area. and we see it because we are on H4. We have marked that place. Let's go to what? To candlestick chart. Now you can see, guys, that we have come, as you can see very well, guys, we have come and break this structure. The market have come back and what? And made a retest. We can read very well the H4 candles. They can tell us that the market have come back, made a retest, and we get a huge rejection here, which means there are a lot of sellers have entered. But we also have this side. Do you see that place? This weak rejection in this bullish candle, which was going up and then comes down close like this bullish one. Do you see we are still having some buyers existing here? We have buyers existing here, but a lot of sellers. Are you getting? A lot of sellers. This is H4 and this is H4. Almost 8 hours the market failing to go up. So we are still waiting to see what this H4, what the close of this H4 will happen. If this H4 close below of this candle here, close below of this candle, guys, we are going to execute. And if this one, this H4 candle would have closed without a wick, or maybe like 80%, it would have been closed like 80% of the body, I was going, as me and myself, I was going to execute here, because this will be like hammer. For me, call it a hammer. Is it a hanging man or inverted hammer, whatever? But for me, I take it as it is. That is how I know. If it closes as a full body here like this, or maybe like 90% like that, that obviously shows me that the market is going to do what? Is going to sell. Let me find an example here. Let me find an example of what I'm trying to say, to tell you. Yes, here a good example which I can see. That do you see around this place? Do you see around this place? The market come back, pushed and tapped to this zone, rejected, all closed like this. If the other candle which I was showing you, which is on the right market, closed like this, I was going to execute immediately there and then erase the market down. Because here it closed like that, I missed it. I missed some entries. I entered at around this bearish engulfing. I entered the market and then I rated it down here. I have closed some entries and other they are still running. Are you understanding? They are still going, because I know on my side we are still dropping. But there are also some high chances the market failed to break below here, and then we continue what? And we reverse. So how, if the market fails to go here and then I see like a bullish engulfing, can I take the entries? No, I will not take the entry. Why? We have a H4 this zone here. I will wait until this zone get broken. If you are to take buys, you have to wait 38 22 72.58 get broken. After that get broken, wait, let me take you to the line chart. If this here get broken, you wait the market to come back and retest this. After retesting, so what you have to do, if the market move from here down aggressively comes up, we will use a Fibonacci tool. We measure the what? The retracement. We wait the market to come back and make a retest. We get our entry confirmations and then we execute. Are you getting the point, guys? So that is the only thing what you have to do, what to be using. Let me give you an example here. You can see that the market moved up, moved down, and goes up. So what if you was here and then you wanted to execute in H4? You can see that The H4 here given us a what? Bearish engulfing. Let us refine it to H1. Let us go to refining and we see what happened. What happened here exactly? What happened here exactly? If you refine, you can see that we got what? We got a tweezers, guys. We got a tweezers at around this place. At around this place. How do I call these tweezers? For me, I call them a tweezers on my side because all bodies they are equal. If I get the candles when the bodies they are equal, the one which closed is equal with another one, I take that side. If it closed bullish and the market was moving down, I exactly execute a buy. And if it closed bearish and the bodies they are equal, exactly, I execute a sell, and then the stop loss can be what? Can be above. Thanks so much, guys, for being here with me. If you have got value from this live, go on and hit that subscribe button so that you don't need to miss any updates. See you to the next live. Peace.